This is the Daily Market Comment by Haralambos Bisuros. I'm Maria Bashardis. Thanks for joining us at XM.com. The US dollar finished Thursday's session slightly higher or near its opening levels against most of the other major currencies, with the laggard exceptions being the Japanese yen and the Swiss franc. Nonetheless, that doesn't imply a quiet session for the other currencies, as several of them traded in a roller coaster manner before settling near the openings. Following the FOMC, which appeared more hawkish than expected on Wednesday, the next central bank to take the stage was the Bank of Japan. At its scheduled monetary policy decision early on Thursday, the bank kept its ultra-loose settings untouched, allowing traders to push dollar-yen above 145.00 for the first time since August 1998. However, this rang alarm bells to Japanese officials' ears, who just 5 hours later decided to intervene to stop the yen's bleeding. The result was a nearly 4% tumble in dollar-yen. After the Bank of Japan, it was the Swiss National Bank's turn to announce its decision. Swiss policymakers raised interest rates by 75 basis points, confounding market expectations of a full percentage point increase. After the release, SNB President Jordan said that negative rates will remain an important instrument to be used if needed, and that further rate increases cannot be ruled out. The central bank completing yesterday's chorus was the Bank of England, which also disappointed the markets and hiked by less than expected. Most investors have been betting on a 75 basis point increase, but instead British officials proceeded with a 50 basis point increment. They maintained their pledge to continue to respond forcefully as necessary to tame inflation, but they also estimated that the economy will match the definition of a technical recession this quarter. They downgraded their inflation outlook, expecting inflation to peak at just under 11% in October, which is decently below the 13.3% peak forecasted last month. A lower than expected hike, a recession, and a more optimistic outlook on inflation may imply slower rate increases from here onwards, and that's maybe why the pound slid after the announcement. Today, new British Finance Minister Kwasi Kwarteng will announce the details of reforms pledged by new Prime Minister Liz Truss. Equity indices were a sea of red yesterday and today in Asia, despite the less than expected tightening by the BoE and the SNB. It seems that investors are more worried about the Fed, and this is also evident by the fact that the 2- and 10-year Treasury yields have hit new 15- and 12-year highs, respectively. This is today's Daily Market Comment. Thanks for joining us at XM.com.